Hi everybody, Alex Deployer from Expert Forex. Welcome to today's analysis of the Forex market. I see there's quite a few well-known names in the room, so that's quite nice. Today's is going to be a slightly different analysis session. I'm going to be focusing on a lot of educational aspects. I'm not really in the mood for trading, and you'll see why not. But certainly there's a lot to talk about. There's a lot going on in the market that I can point out to you. And hopefully we can turn this into a bit of a discussion session to get the ball rolling. Just as a confirmation, can everybody hear me okay? I tend to neglect to ask that question, and sometimes I end up, yeah, everything seems to be okay. All right, so let's go straight into it. I'm going to see if I can, got a lot of screens here, so let's see. Okay, so the first thing to look at is really the stock exchange, and you can see that that is a weekly chart of the stock exchange, and you can see the volatility and the unsettled nature of the index charts. Very oops, wrong one that I've got hold of myself. You can actually see it, I can't for some strange reason. I'll just double check here. All right, let's see if I can see it now. Okay, right. So as you can see, the stock exchange is still in a complete mess. No, it isn't. Oh, I'm showing you the wrong charts here. Let me just see if I can open that up. Apologies for that. Profiles, and we'll go to the currencies. No, not currencies. Index charts. Okay, there we go. That's much better. Okay, so here are the index charts, and you can see this dramatic fall that's happened in all the indexes, really bad. And for that reason and the coronavirus effect, I'm not in the mood for trading, but there's a whole lot of other things that we could look at. We could actually look at the currency charts at the same time. So let's have a look at what's happening on the currency charts. And I'm going to just share that one. Apologies, I've got a lot of charts going all at the same time here. And new share. And I'm going to share, I think, this one. And there we go. All right, so what we're looking at here are the currency charts in the format of the multiple moving averages. Now, there was quite a bit of a discussion last week about dominance of the US dollar and the yen and things like that. And we can see a lot of that playing out. Now, as I explained, that when the US dollar is dominant, all the charts start looking the same. So if you look at this, we've got the pound going down, the Aussie going down, the euro going down, and on the other side, we've got the franc going up because the US is the first currency, and we've got the CAD going up, and the yen is a bit messy, but it is also going up. So there's an element of USD dominance in the market. So in other words, all the charts are dancing to the tune of the USD, which means that what we have to do when we are trading, we have to honor the trend. So in other words, we've got to think through lots of times before you trade against a dominant dollar. Now, having said that, let's have a look at the yen. Now, the yen is also showing dominance because the pound yen is going down, the Aussie yen is going down, but the euro yen, for some reason, isn't. So that's the only exception. But there is an element of yen dominance in the market. And these two charts show the weakness of the New Zealand dollar. You can see the weakness when the currency is the second currency in the cross, and it's going up, it means there's a weakness of that second currency. And the same thing here for the Oz. Okay, so the market on the whole is trending. If you're going to trade with a trend where you can. I'm not the greatest with a trend trader, I must say. I like trading the RSI and bounces off support or resistance and that type of thing. When the market's trending, it's meaning that there is a lot of a dominance in the actual market. Now, the other thing that's happened here, and let's go to the hourly charts, is that there's been a lot of weekend gaps. So if you look here, the euros created a gap there, the pound has created a gap, the Oz has created a gap. That one's closed, that one's partially closed, that one has closed. That one, the yen hasn't closed. Traditionally, the weekend gaps closed, but that one hasn't. The franc one has closed nicely. That one didn't have one. That one actually closed, but was a small one. And there we are. So we've also got a lot of gaps in the market. So again, a lot of instability in the market. And at the moment, we might see some trades today, but I think I'm going to focus on some educational aspects. I hope that's good with you guys. Let's see. So I'm going to start with the 4 hour. Now, these are my favorite charts. The 4 hour RSI charts are my favorite. And what I've done is I've actually cleaned them up. You'll see there's no lines on these charts. And it's basically because I want a fresh start and that type of thing. So the first thing I want to talk about is the RSI. I've got that on the screen there. And the RSI, if you look at the indicators, if you click on the indicator icon, you'll see that the RSI lives in the oscillators classification. It's an oscillator that is happening there. So oscillators are the ones that like sideways markets. So they go overbought and they come back and they go oversold, they go overbought and oversold. So that's the kind of market oscillators work in. Trending markets are more for moving averages and things like that. That's why the multiple moving average is a good guide to use for exiting deals in a trending market. When the moving averages cross over again, that's the time to exit in a trending market. Not good for getting in, but good for getting out. But let's have a look at some really strong trends, and let's see what value the RSI has in a trending market. And we can have this was probably not the best example, but let's have a look. Now, when the market is trending, now here's the pound, it's trending downwards quite strongly. The RSI will not get to the other side of the indicator chart. So in other words, if it's oversold, it will stay oversold and it will not go to that end. So that's one of the weaknesses of the RSI. So if you mustn't trade it in a trending market. But if you are trading it in a trending market, you're going to get bad signals all the time. Because if you look at this, I'm just going to draw a few trend lines. Okay, there's a trend line. It would have failed. I'm just drawing rough trend lines here. There's a trend line. It would have failed. So what will happen is that you will get failing signals in a trending market with the RSI. So very dangerous. And how do you tell a trending market? Trending market is if the candles are making new low. Well, a downward trend would be lower highs and lower lows. So those candles are making lower lows and lower highs all the time, and that defines the trending market. So that's one way of looking at it. And also you could look at it on a range. If it breaks out of a range, and that's most probably the range that it's been in, then that part can be regarded as trending, but the trend actually started up there. Okay, so how do we use the RSI in a trending market? How can we make money out of it? So you just use the opposite rules that you use normally. So the rule that I like using, and you'll see a video will be coming out in the next day or so, it says enter sell signals when the RSI first enters the oversold. So you would actually enter a sell over there. Okay, so you start selling there, and then you keep on entering sells when it crosses the oversold area. So you would be enter a sell there, you would enter sell there, and you would enter a sell there, and you would enter a sell. Let's see, not about there. Okay, so that's the way of joining a trend in a downward market. So instead of taking these false buy signals all the time, you say, oh, rules have changed, it's a trending market, I'm going to use that approach. Now, has anybody in the room ever thought of using that approach? It's actually quite an interesting approach, because it keeps you in the trend a long time. So the only exit for those trades is when the RSI goes to the other side, when it goes to the overbought. And I will look at a few examples of that if I can find it on the trend. Any ideas, any feedback on that? Let's see if I can find another example of that. No, these are all strongly trending markets. So in this case, for instance, you would enter every time it crosses the overbought. You would enter there. You would enter there. You would enter there. It's not they're not the most efficient entries, but they are certainly. Look at that one. There we are. We'd enter there, and you'd enter there. So you'd have really good trades. And these earlier ones, let's say, let's just finish that one that I want to highlight. All right. So there's your entry. All right. So you'd enter there. You'd enter there. You'd enter a buy. You'd enter a buy there. Buy there. So when would you exit? You would exit when the RSI touches the oversold again. Now, can you see this is a method of keeping you in trades? And a lot of people have a problem with cashing in too soon. I've actually had a few comments. Oh, I can't stop cashing in too soon. So so this is a way of making sure you don't cash in. So you only, because when the trend changes, this RSI will go down very quickly. It's actually very fast to get to the oversold, and then you just cash in your deals. All right, so interesting comment. All right, here's an example I think that might be in, here's a good example maybe of one. All right, so here's an uptrend. There's an uptrend happening. So you would buy there. So you would buy there. You would buy there, and you would buy there. Yep, that's fine. And then you would sell there. So that's how that would work. So there's a complete set of transactions that would happen, and you'd sell them all over there. So that gives you an idea of how that strategy works. And that's when the market starts trending. And that's why the first thing I showed you today were those multiple moving averages that showed these fantastic trends happening at the moment. All right, so let's have a okay, so all right, no comments from the people in the room. All right, so the next thing I want to talk about, let's just get rid of all of this, are trend lines. Now, in a market like this where things are going pretty wild, the best entries are in fact, and the easiest ones are in fact, trend line violations, because they just you know, the market is unstable, and when there are moves, the market's going to move quite strongly. So let's have a look at this chart again, and let's talk about trend lines. So here let's just start here. There's a sell trend line. Okay, now you could argue that this is a trend line, but I wouldn't take it for you know, this is not a really good one, but you could argue that was a trend line, and this certainly would be a trend line. So trend lines, and let's look at the big one. Here's a big one there, and then it goes up, and then we've got this one here. Okay, and then up there we've got a few there. I would disregard that spike completely, but that could be a trend line, or this could be a trend line. Okay. All right, question that's come in. How do you decide the time frame and the RSI length? RSI length. What is length? Is it a period, or are you talking about period there? Rather, is the word length is a little bit tricky, but I guess it means period. All right, so there are some trend lines now. So let's talk about trend line rules. So the rules on trend lines generally are, the more touches, the more strength the trend line has. So if you've got, like there, 1, 2, 3, 4, 5, 6, 7, there's 7 touches on that trend line, so it has more validity. Here we've only got 1, 2, 3, 4 touches, so that's also not bad. That one might only have, no, that might also have 4. This one, for instance, has got 1, 2, 3, 4 touches. That one, 1, 2, 3 touches. So that one might not have the validity as much. And that one's only got 2, 1, 2 touches. So the number of touches tells you how strong the trend line. If it's got a lot of touches, then it's very strong. And if it has a few touches, it is less strong. So in general, that's how you can evaluate trend lines. Now, if you want clarity on trend lines, let's say you're not sure about that, then you just go down to the next time frame. So that's a 4-hour. Let's just go down to the 1 hour, and you can then start seeing the trend lines a little bit, and you can refine them a little bit closer. Like I've drawn them very badly here, so you can refine your trend lines if you draw down to the lower time frame. So that's one trick you can do. The other thing about trend lines is, the more horizontal they are, the stronger they are, and the more vertical they are, the less reliable they are. That's a general guide. So, for instance, a horizontal line like that, it has got more validity than a very steep one like that. So in general, those are the trend lines. Now, what I like about trend lines, anybody can train trend lines. It's basically just linking turning points in the market and then joining them up with a trend line. Has anybody ever just traded trend lines? Let's see. Sorry, I'm looking at the attendance list. We've got looks like a quiet attendance list here, but it is a technique you can trade on its own. You don't need anything else. You just draw trend lines and you trade the breakouts. Trend line, trade the breakouts. It's such a simple technique. And once you've back traded it for a couple of hours or days, you won't make mistakes anymore. You will just, it will just become second nature. You'll find trades without even drawing the trend line. You'll just see the support and resistance and you'll draw the trend line. Now, yes, you can trade trend lines in conjunction with other things, but trend lines can be traded on their own. So I just want to show you an example of using it with other things. So there's the RSI, and here you can draw trend lines on the indicators too. So why I like the RSI is it is a leading indicator. So if you look at this, you'll see that it's actually giving the trend line violation way ahead of the price action. I mean, literally on the first red candle, it's giving a trend line violation. So that's why I like the RSI. And if you go through these, you'll find a lot of them. That one might be concurrent. The RSI is a leading indicator or a concurrent indicator. In other words, it's the same as, but it's never a lagging indicator. If it's lagging, then there's something going on. All right, so just let's see. There's a concurrent. You see a concurrent. So you can use indicators to back up your trend line violation. In other words, if there's a divergence on the RSI and there's a trend line violation, the trend line violations will normally occur way in advance of the price. So that's a little tip on trend line violation. But certainly, if you want to make money, do a useless exercise, which is just trade trend line, back trade. So in other words, back trade. So in other words, you go to the beginning of this chart and you just start drawing trend lines. Oh, I would have got in there. I would have got in there. I would have got in there. You know, like that. Start training yourself how to trade trend lines, and that would make quite a big difference to your trading results. All right. So how do you decide the time frame and the RSI length? Period. Okay. I use an RSI of 4, and you'll see I only use the RSI of 4. Occasionally I would go to 3, and occasionally I'd go to 6, but 4 is my main number. Now, why did I decide on 4? Well, it's after years and years of experience trading the RSI. I found that the RSI 4 is the best. Now I'll show you why. Mainly why. If we take this RSI down here and we make it, let's just make it 8. Now before I hit the OK button, can you see how many overbought and oversold conditions exist? Now if I make it 8, suddenly most of them disappear. There'll still be a couple there. One, you know, I didn't count them, but so you've got to wait longer to trade if you're trading the 8, whereas with a 4 you will trade a lot sooner and you'll get leading signals. The RSI's, you know, for instance, that signal over there. Let's see what it looks like on a 4. Okay, so it's a definite signal on a 4, whereas on a 8 it was a maybe. So and this applies to all indicators. the smaller the period, the smaller the period, the more sensitive it is, and the more sensitive signals you'll get. The longer the period, you'll get less sensitive signals and a lot fewer, but they are said to be more meaningful. But so you've got to make a decision. Do you want to trade 5 signals using the RSI 4, or do you want to trade 1 using the RSI 12, or 13, which is the default, or 14? So the 4 has been very good. The 4 is also very good for trend line, drawing trend lines. If you use the 8, you, again, let's just that's the way to play around with these things. You just put other. If you use the 8, you'll see fewer trend lines, and you see there was the old trend line. Might still be there. It might still be there. There we are. The RSI is actually a funny one. It gives the same signals no matter what time frame you're on. You see now that trend line would not. Again, while we're talking about trend lines, the further an RSI trend line is from the 50 line, the less reliability it has. So, for instance, that one is crossing a long way from the 50 line, less reliable. It works, but it's just less reliable than one that crosses closer to the 50 line. That's more reliable. That's just a general guideline again. Okay, so that was talking about RSI. It was talking about trend lines, and that's basically what I wanted to talk about today, because I don't really feel like trading. The market's too trendy and also too unreliable. So I thought we'd just talk about a little bit of trading stuff. But certainly all of these massive trends that have happened, and if we take let's see if I can change the thing again. If we take the indexes, you can actually see how you could have gone into those trades quite. Let's just view the thing. Line studies. I know it's in retrospect, but the trend lines really are incredibly powerful. And that's what I would use in this particular market. The only way I would do it is using trend lines in this particular market. So, I mean, there was all the warnings were there to get out. Let's just go and then the thing, these are daily charts. So if you want a refinement, you see in there are trend lines, but you can't see them very clearly. So you then all right. So if you need clarification, so let's have a look at the Nasdaq. I'm going to go down to the where am I now? Time frames. Let's go down to the 4 hour. You see you see how unclear that part was. But if you go down to another time frame, you can see the trend lines a lot clearer over there. That's most probably those kind of things. So just drill down. So if you can't see them very clearly, just drill down, and you'll start seeing things a lot clearer if you drill down. But most of these big trends could have been caught with a very, very simple trend line. And the way to trade big trends like this is you just trade when the price starts making a new low, It's a bit late, but that's the way you get it. It's a bit like catching a train. You know, you're either going to miss it or not. So catch the last carriage, and when it's making new lows, just get in. Because that's the definition of a trend, is it's making new highs and new lows. So trying to get in at the new highs is very tricky, but getting in the new lows is often a lot easier. All right. Does broker time zone important to draw trend lines? Because the trend line even looks different from broker to broker. Okay, yeah, let's have a look at that. Good question. Very good. Because I'm just going to unshare this one and share. Let's see. Share that one. Okay. And I'm going to, yeah, we can use this one. All right, so I'm just going to try and make this half the screen, and then I'll bring another broker on. Right, so this is IGI. Then I'm going to try and bring another broker on. Let's see. You can see that. I don't know if I can share two screens. I'll see. Right, and this was the Euro Oz. I've just taken a random one here, and I'm going to see if this shows up on your screens. So I'm going to just drag another one there. Okay. Out, and then let's see if I can just size it correctly. Boom. And oh, it's a bit difficult, this one. Why is this one looking so different? Is it the same one? Sorry, I'm battling to get this to show properly. Oh, there we are. Okay, let's see. No, you can't see it. All right, so I'm going to have to show you two slides. All right. So have a look at this. This is the Aussie Euro Oz, and this is the 4-hour Euro Oz. And the question was asked: just look at these. Look at that trend line, and look at that trend line. All right. So now I'm going to switch to another broker, InstaForex, and the same period. And let's see. This is a little bit tricky because I can't share properly here. So I have to reshare. I'll share InstaForex. Okay, there we are. Now, I don't know if you remember, the first one was horizontal. Now, there is no horizontal line. It's completely different. So the trend line would most probably go something like that. And that original trend line, or that secondary trend line that I showed you, doesn't exist on the InstaForex. So have a look at this. Just try and remember this shape. And I'm going to switch back to stop share, and then I'm going to switch quickly back to IGI. Completely different. So and the reason for that is that there are two reasons. Brokers have different weekend cutoffs. So in other words, some brokers cut off on GMT plus something, others GMT plus something plus one. So they all have different cutoffs. And then the other thing is when they set their charts up, they set their 4-hour charts to start different hours. So that's why the candles are completely different from broker to broker. Good question, yes. So the answer is, whichever broker you're using, use that broker only. So don't try and trade 2 broker accounts at the same time. Only use one broker for analysis. As long as you are consistent and your indicator levels come from the same source that you're looking at all the time, then there's no right or wrong. And obviously this only really applies to 4-hour, although the 1 hours can differ also, because some brokers have two more candles at the end of the week and have 2 less candles when they start, for instance. So that could also cause the 2 brokers to misalign, but just for on a temporary basis on a Friday and a Monday, and then it will correct itself over the week. But a good question there. All right, a question that came in. Alex, do you have a method for establishing a target for a trend line violation or breakout? Okay, so here we have a trend line violation, and we say, all right, when are we going to get out? The answer is no. Nobody knows. Nobody knows what's going to happen. So one of the ways of doing it, and is taking trades in the waiting for a trade in the opposite direction. So if you've taken that, then you might want to trade in the opposite direction, which might be like something like that. So when it goes over there, you get out. So you use the same method that you got in to get out. So that's the other. That's the one way of doing it. The other one is, as we know, as I've said, that the moving averages are great exit methods. So I'm just going to slap on some moving averages here. Trending, moving averages. Let's just put on, let's say, a 4. I like 4. And let's put on a 13. Moving average, give it a different color, green, and we'll say 13. So what you would do is you'd say, all right, I'm going to get out when those cross over. Now I've just used random numbers for my moving averages. You can use let's say 8. Let's see what 8 will give you. All right, so that's the way. That's the other way. So you see, moving averages are trending indicators. So they will tell you when the trend is over. When they cross over, the trend's over. So that is most probably the best in a trending market. That is most probably the best way to get out. I hope I've given you an idea there. So you can either use the same method that you've got in on to get out, or the more correct one would be use a trending indicator to get out too. How does that sound? Bernard, any other ideas? Now, you could obviously go into support and resistance analysis and all that type of thing, but certainly in this market that we're in right now, none of that will work much. So you use trend lines to get in and moving averages to get out. Or traditionally, I would use RSIs to get in and moving averages to get out. All right, I think that is it. I think we've had a good discussion. Thanks for those questions, comments. I haven't looked at the market. As I say, I'm not really there are some nice trades out there, and the big the big thing is to, you know, if you're going to trade at your own risk type of thing. It's I don't know why those aren't disappearing. Let's see why those aren't disappearing. Maybe I have to actually delete them. All right. Any other questions? Now I know there are some. Lorraine, I must probably owe you an answer on a question you asked in the previous one. Unfortunately, I've actually forgotten what the question was, and we might have to do that in a future webinar. Thanks for attending all of these webinars, Lorraine. Okay, so any other questions, comments? I've got. I think we've come to the end. No further questions. All right. So thank you very much for your attendance. Thanks for those questions. And as I say, I was just in the mood not in the mood for trading, but in the mood for just talking about the market in general and trading techniques and things like that. But in general, I find after all of these years that the simple techniques like trend lines and things like that, and moving average crossovers for exits, and all those simple techniques are really what work. And in the end, if you keep it simple, the other thing is exclusivity. You know, when you get married, it's like exclusivity, and the same thing applies to forex trading. Try and find a reasonable technique and get married to it. That's it. And then when you get married to it, don't look sideways at any other technique. Make that technique work with all its weaknesses and all that type of thing. Find a nice simple technique and make it work. And you'll be amazed at, if you are become an expert at one technique or two techniques, how well your trading will go, and when you stop looking at other techniques. Because if you're looking at other techniques, it means you're not confident, you're not happy, you know, all those kind of things. But exclusivity in forex works. Barry Thornton has basically used the same technique for 15 years, and that has paid handsomely. He doesn't even want to look at any other technique. He specifically has a very low profile. He doesn't visit forums. He doesn't even look at anything else. He knows what he knows, and that's what he trades. Okay, so thank you again very much. Thanks very much, and cheerio.